the Best Business Podcast.
Hello and welcome to the Best Business Podcast, episode 6. He's Jack Seymour.
He's Phil Murphy.
Thank you for joining us. Right, how's it going, Jack?
Yeah, it's going well. It's month end. Here we are in October. Can't believe we're on at episode 6 as well.
I know, doing really well. We've had some good feedback on the last couple of episodes where we delved into case studies. And I think people enjoy watching that and seeing real life examples of how we're helping.
Yeah, because it really brings it to life, doesn't it? And allows people, the watchers, the viewers, to say, is that me? Is that my business?
Yeah.
I'm experiencing that same issue in my business. So.
Yeah, and we spoke to a few accountants this week as well who said actually, as soon as we mentioned, I think we mentioned corporation tax loans, which we're going to talk about today. He had a client come straight away. Within a week, a client had mentioned it to him. He was a bit worried about how he was going to pay his corporation tax bill, and he said, did you know you could spread that over up to 12 months? So I think it is helpful to accountants out there as well and other business advisors when we're giving them these different products that they may have forgotten about or may not be aware of.
Yeah, because a lot of what we've recently heard, as you well said, is accountants aren't even aware that these loans are around. Yeah. December, January are the busiest times, and July for any tax loan. Yeah. With that fast approaching.
Yeah, it's a good time to really bring it up to date, we thought, didn't we? And just so we're going to talk about the various tax loans that are available, how they work, and then, if anyone needs that assistance, then at least they've got some idea that that is an option for them. Yeah,
because from my opinion, I think it's a no-brainer, but let's go into it first.
Okay, so let's start off with corporation tax loans.
Yeah, so corporation tax, what is corporation tax? Corporation tax is the tax that you pay on your business profits. Yep. You normally pay them once a year. So if you make anything below 50 grand of profit, generally it's around about 19%. Your accountant will obviously advise on the tax implications. But it's a big lump sum at the wrong time for most businesses. Yep. Just after Christmas, it's a kick when you don't need it. So what is the solution to that, and how can corporation tax loans benefit the client? Yeah. So I'll give a little overview, shall I?
Yeah, if you can. Yeah, we'll start off with the corporation tax, and then we'll go into the VAT funding as well, which is quite similar. But perhaps we'll just have a quick overview on the corporation tax loans, how it actually works. So your client comes to you and says, Jack, we've had a great couple of months, but actually we spent a lot of money. Let's say it's a manufacturer, for argument's sake. Yeah. We spend a lot of money on materials. We've got a lot of money outstanding. Just realised that we've got a big corporation tax bill due, and maybe I can pay it, but it's going to really put a squeeze on me for the next couple of months. What are my options? Yeah,
well, I'll give you a real-time example. So, a manufacturing business, or I had a healthcare practice. So they did domiciliary healthcare, turning over around about £6 million a year. And the chap's done really, really well for himself. He came in January 2024, he came to me and said, I've got a corporation tax bill of $229,000.
Right.
What do I do? How do I pay that? Because yes, he had the money in his account, but that would have literally pretty much exhausted. Wiped him out, and he would have been struggling to hit payroll, let alone everything else. Yeah. So I simply said you can spread your corporation tax anywhere from 3 months up to 12 months. Yeah. The interest that you pay will come off your corporation tax bill next year, so that will actually reduce it. I got it at under 10% for him.
That's really good.
And he sent me 6 pieces of information. He spread that corporation tax bill. He spread it over 10 months. The reason why he spread it over 10 months, he felt those monthly repayments were manageable. Yeah. And that it gave him 2 months as well, where he had no payments. If he wants to pay his corporation tax bill next year himself, he can do so. But why would he? Because he says to me, this is a no-brainer, Jack. It comes off my corporation tax bill next year. It eases my cash flow. I don't have to go to HMRC and get a time to pay. Yep. So they're super happy, because what the lender does is they pay HMRC direct, and then my client just had a direct debit to repay that borrowing on a monthly basis. So it's massive, absolutely
really
massive.
Really, really helpful. And it's a fixed rate as well, so they know where they are, they know what the payments are going to be.
Yeah, flat rate, fixed rate, and they know exactly what it is.
Yeah, and I think it was interesting as well, because we did have a chat with one of our lenders this week, and I think under 150,000, there's typically no security required.
Absolutely.
No guarantee.
No guarantee either.
Which is really good.
So, no guarantee up to £150,000. As I say, it's coming off your future bills.
Yeah.
I would say it's one of the most underutilised forms of finance out there.
Yeah.
And it's just making our viewers aware, isn't it?
Yeah.
Because everyone, well, not everybody, but a lot of businesses have to pay VAT unless you're VAT exempt.
Yeah.
So you can spread your VAT bill. But everyone is subject to corporation tax, hopefully, if you're profitable.
Yeah.
So why wouldn't you?
Yeah, yeah. I think it's also worth mentioning that if someone has paid it and they would rather pay HMRC directly, they can actually retrospectively take out a corporation tax loan.
Yeah.
After, I think it's within 30 days of paying that, you can still get that retrospectively paid.
That's a great point. Yeah. So as you rightfully said, if they paid HMRC and they say, oh, it's left me a little bit short, or they're watching this now and they weren't sure at the time.
They may have thought, I have to pay this.
Yeah.
They've paid it and gone, oh, I've paid it, but it's killed me. What do I do?
Yeah, a lot of accountants as well, because you mentioned those at the start of the podcast, that are saying HMRC are becoming a lot more stringent now, and with the budget approaching, that they are being less favourable to offering these time to pays and enforcing penalties as a result of any arrears. So it's you want to make sure that if anything, you're keeping up to date with them, and it's one less thing to worry about in your business.
Yeah, and ideally, if you're going to be looking at further finance, if you are a growing business, you don't really want a time to pay. I mean, it's not the end of the world because they're quite common, but ideally, you prefer not to have a time to pay arrangement in place.
Yeah, because it's all about business growth. That's the businesses we work with, isn't it, on a daily basis? Yes, we do work with ones that they're funding because things have gone a little bit awry and they got some challenges and they want to get back on their feet. But day to day, we tend to deal with the growing business, and how do we fuel that growth? We've got to make sure that they're as cash rich at any given time, so they can ebb and flow with those market trends. Yeah.
Well, that's really great. That's a really good overview. So, and moving on to VAT payments. So this is quarterly VAT funding.
Yeah.
Similar thing.
Absolutely. Yeah, it works in exactly the same way. Every quarter, as we well know, you have to pay the VAT man, and this can obviously become quite a large payment as the business grows. That payment becomes larger because the sales increase.
Yeah.
So.
And it might just be a certain quarter of the year. So like you say, coming up to Christmas, it might just be that January VAT bill is always the one that really hurts a business. So you can just pick and choose which quarter. If you just have one tough quarter, you can just use that one.
Yeah, because like you said, there's no obligation to carry on and keep using it. People can just dip in and dip out as they feel fit.
I think another thing that's worth mentioning as well is with any of these loans, you don't have to keep reapplying. Once you've sort of gone through the process and you've got the facility in place, it's there for you to just use. If you ever need to use it again, you don't have to go through the whole process again. So if you think, well, just the way our VAT quarter falls, this is always going to be a problem, then it saves you having to go through the whole process every single time.
Yeah. Once you're through the pearly gates, that's it. You're in. So,
like you say, the interest rates are pretty good.
Oh, fantastic!
And no security again. That's different to an unsecured loan. There's typically a personal guarantee, isn't there?
Yeah. Any business borrowing and the fact, like you say, there's no security is always a bonus, isn't it?
Yeah. So the other one is self-assessment funding, and that's either January or July. It can fall on 2 different dates.
Yeah.
So it's just worth mentioning. Again, same process really.
Yeah, you can do it in your own name or the business name. We tend to do it in the business name for people. And again, same process. You can ease that cash flow and spread that self-assessment tax over a longer period. Because if it's been a successful year, right, and you've, as a director or the directors, have taken some money out, and they go above that, let's say they've taken out 100,000 or 150,000 in that year, they've been successful in running their business, and then they forget the self-assessment is round the corner, then again you would want to ease that cash flow, maintain a stable profits in the business.
Yeah. Sometimes you think, we've got that big deal coming in December, that'll sort that out, and then that deal falls into January, and they're like, we were sort of relying on that. We've all been there, I think.
Yes.
So that's great. So I think we'll just quickly touch on a few points about the process. So turnaround time is quite quick on these, about 24 to 48 hours.
Everything is human underwritten, so that's one of the benefits to it, is that it's not going through a algorithm, that we can have conversations, we can put a nice strong case together. What I will say with all tax funding, it's there for what we class as a tier 1 and tier 2 application. So it has to be profitable, you have to have a solvent balance sheet to be eligible as a bare minimum. But the turnaround time is, as you rightfully said, typically 2 to 3 working days done. Yeah,
brilliant. Minimum around about 10,000 typically. That's the minimum sort of tax bill that you can get funded.
Yeah, absolutely right. Yeah, 10,000 upwards. There's no top end, so give us a try. And if a viewer's watching this and they've got a £15 million VAT bill, potentially in construction or high turnover businesses. We can do it.
Finally, as we said, the renewal is straightforward. There's no need to re-sign a credit agreement for the same product.
Which is
really, really useful.
Absolutely.
So we hope that was useful. Anything else you want to talk about with corporation tax loans?
Well,
I think we've pretty much covered it all there, haven't we? There's one other thing. You can use the same facility for professional indemnity insurance.
Yes.
So it's not something that we come across a lot, but it's worth mentioning that is something you can do as well.
In the law firms, accountancy firms, that has gone up in recent years. So
there's another one thing.
Well noted.
Okay. Well, there you are. Thank you very much for joining us for episode 6. Thanks for listening or watching. Please like and subscribe, and please visit thebestgroup.co.uk where you can see all our different range of services. Contact us for a free consultation to see if we can be of any help. Thanks. See you on the next one.
See you on the next one.
Thank you for watching. If you have any commercial finance requirements, please visit us at thebestgroup.co.uk. See you on the next episode.